Hello. We're just gonna give everyone a minute or so to settle in, but before we do so, I'm here in Stockholm and it would be great to know where everyone else is tuning in from. So there is a chat function to your right. Maybe you can pop in your destination. Cardiff. Hi, Mette from Denmark. Brussels. All right. We're global. I was hoping to get a few attendees from Iceland. It's kind of a big thing over there that I'm doing this webinar, but maybe they're always a bit late in Iceland, so they will join us very soon. Oh, we have India also. That's nice. Fantastic. Looks like we're having a lot of people attending. Super exciting. Netherlands. All right. Fantastic. Well, I think a minute has passed, so let's dive in. Hi, everyone, and warm welcome to Normative's January webinar, CSRD Redefined. Today's session is all about making sense of the fast-changing sustainability and regulatory landscape, especially in the light of the new CSRD thresholds. We'll have a look at what has changed, what hasn't, and what this means in practice for companies both inside and outside of scope. My name is Krumi Christiansson. I'm an account executive here at Normative, and I work closely with sustainability teams across the Nordics who are navigating this complex terrain. Before joining Normative, I was actually a philosopher. To tell you the truth, a pretty mediocre one. But philosophy is all about seeking truth and clarity. Over the past year, trying to understand the state of CSRD has been, well, challenging. So the goal of today's webinar is to bring some clarity to the chaos. Before we jump into the topics of today, I just wanted to go through a few ground rules. The webinar today will be 45 minutes. It will be recorded and you will have a link sent to you that you can look after the fact. Down to the right, there is a questions bar. So please type in your questions and towards the end of the session, we'll address them together. We have a really exciting lineup today of speakers and topics. So I'm excited to announce that you'll hear from Dr. Alexander Schmidt, who is an expert advisor to Normative on climate policy, standards, and the wider sustainability ecosystem. We also have Sepanta Sharafuddin, who is a CSRD consultant here at Normative. And for the past few years that I've been at the company, I've had the pleasure to get to know these individuals. And every time I speak with them, I am left with a bit more clarity, no matter the topic. In terms of the agenda, Alex will start to discuss the CSRD thresholds, what has happened and where we are now. Sepanta will then walk us through how this impacts out-of-scope businesses and in-scope businesses. We'll move on to a panel discussion. I will give a brief summary of how Normative can help, and after that, we'll move on to the Q&A. I really look forward to hearing you from all on this call. But before we hear about from the speakers, I wanted to give a quick summary of Normative. For those who don't know, Normative has been around for the past 12 years, supporting organizations with carbon accounting. We have offices in Stockholm, London, and Copenhagen. And we're extremely proud to be trusted by a large number of organizations to support them on their net zero journey. I think the main reasons why companies trust Normative is due to our experience in the field, that we can support companies in a vast different industries. And we also always offer support to navigate through the complexities of carbon accounting. But in the last few years, CSRD has always been a big topic and there's been a lot of uncertainty. So with that, I will pass it over to Dr. Alex to go through the recent changes.
Thanks very much, Kumi. Hello also from my side. Great to see so many people from so many different parts of the world dialing in to this topic. And of course, this shows also that this topic is not just relevant for some companies in the EU, but actually it has gathered global interest, and rightfully so. Not the least because of all the confusion that has been caused around this CSRD. I think it's fair to say over the past few years. So where I'm going to start is walking you through a bit of the historical context, just understand where did CSRD come from, what was the original intent, and where are we now, before then passing on to Supanta, who is going to give you more nitty-gritty details around what actually is now very relevant for probably many of you who are now dialing in. So let's just start at the beginning, more or less the beginning. I'm not going to start at the very early days of the CSRD, but just wrapping together the years 23 and 24. I think it's fair to say that all of us here who have been either involved with carbon accounting, the carbon industry, of course, policy making, or sitting on the other side of it, meaning the companies on the receiving end, they have been prepared or have been preparing for the CSRD in those years. So January 23, the CSRD officially enters into force. We have then the ESRS, these rules for which data points actually to be reported on, which Supanta is going to pick up later with you guys. Those have been then set or adopted, and we were looking at more than 1,000 data points, which honestly made many companies nervous. So companies I've been speaking to, Normative has been speaking to over those months, it was really a lot of not just interest, but also worry about what is this, what is coming at us, what data points actually are relevant for us. Because already in 24, those first wave one companies, as they were called, they started to collect the data because they knew in the year after they would have to report. And honestly, if it's 1,000 data points, some of which are spread all across the organization, you need time to actually get those in order and get those from the different, sometimes even geographical areas, and of course also systems. So July 24, we're looking now like 1.5 years after it came into force, the deadline for the EU member states to transpose the CSRD international law was set. Honestly, many companies missed the deadline, but it was supposed to be then transposed to national law, so it then became really serious business. And then, of course, dutifully so, many companies of this wave one, so wave one were the original kind of largest companies who were already obliged to report under the NFDR before. So again, one topic that Supanta is going to, or at least an overview that Supanta is going to provide you with later on. So those companies in January, just last year, so a year ago, they started to prepare actually their first reports as they were supposed to. And then came February, which saw the so-called omnibus simplification package, the first of this kind. So for context, when you read the omnibus, it's oftentimes equated with the CSRD pretty much, to be honest. Same as ESG often is understood as sustainability. While we know that both are much broader. The ESG has 3 very distinct areas, and the omnibus has very distinct areas. One of which is sustainability reporting, and then one of those subcategories, so to speak, is the CSRD which we focus on. So just to give you a bit of a bigger picture, because you might hear now more omnibus updates coming, so it's not wrapped up at all. It is just the sustainability part of the omnibus 1 that we're now looking at. So that's, I think, also important context. Back to my little historical overview, February saw then the first proposal, which pretty much said, as the name implies, simplification. They heard from many businesses that honestly, they're overwhelmed by the requirements of the CSRD, of the data points, and just of the sheer task of collecting especially supplier data or supply chain data, the so-called then Scope 3 emissions, which companies under the Greenhouse Gas Protocol are also accountable for. So this was the first announcement, so to speak, or proposal. So companies already were, again, on our side, people who support organizations with the reporting, they suddenly get a lot of confused calls. What is this now? Should we now not report, or what to prepare for? A bit more clarity came then in April. the name here, Stop the Clock, was literally what happened. And the EU said, oh, hold on, there's, I think, a lot of work we have to do here around simplifying the reporting requirements. We're just going to stop the clock, meaning 2-year delays on average for most companies. So this was in April. So then, of course, many companies said, well, we started together, maybe we already did report from this wave 1. So there was a lot of confusion and uncertainty in the market. It was attempted to be resolved in July with a quick fix. There was a 2-year delay for more complex reporting issues for the wave 1, so companies who already started to report. And then in July, we saw a bit more clarity emerging as to what can the simplification provided by the Omnibus 1 actually look like. So the EFRAG, the group tasked with setting those reporting standards, the ESRS, came up with a proposal which saw a reduction of more than 60% in data points to be reported under the CSRD. Still a lot of question marks, which were then finally clarified just a month ago in December 25, when the EU Parliament approved a provisional agreement around the Omnibus Simplification Package 1. So it was almost like a year of uncertainty, of ups and downs, of some agreements, and then again revisions of those agreements. But since December, we know a bit more where we actually stand. So everyone here is excused for being a bit confused still. This is what we try to, or we will clear up here with you in the next half an hour or so. So what actually is now the status quo when it comes to the CSRD under the Omnibus simplification? Again, there's more to be discussed, but we just focus for now on the CSRD. The current agreement that has been reached sees first and foremost a radical reduction in companies who fall in scope of the revised CSRD, almost 90% reduction. So before, I think we're talking about almost 50,000 EU companies, and now 90% of those have been pushed out of scope because they are either under 1,000 employees, so smaller companies in that sense, and or the turnover does not exceed 450 million in a year. Also, any listed SMEs have been removed. So a lot of companies maybe or might have issued like a sigh of relief, but we're going to come to some other consequences of this later on. One other agreement is the value chain cap. So companies with fewer than 1,000 employees, they have now a legal right under this new simplified CSRD to refuse cumbersome sustainability data requests that goes beyond any voluntary reporting standards. That should lift the burden off of those smaller companies to be, some of you might be part of those, who are overwhelmed by these questionnaires of hundreds of questions they have to answer for tens of suppliers sometimes, or buyers of their products. So the value chain cap is meant to protect those. And then last but not least, as I already hinted at, and Sepanta will double-click with you on, is the simplified reporting standards, the ESRS, which are not yet final, but it for now they are proposals that are going to go in consultation and is expected to close then in this year with an application, so early this year, with an application in the coming years, so in 2027. So this was a bit of history, a bit of where we are right now as to the agreement as of December, and then we're going to move to some of the nitty-gritty. But before we go to more nitty-gritty, actually two things. One is I see here in the chat that people are asking questions. If you could help us and put them into the questions tab, that would be amazing, because this way we can keep track of them in the chat that get easily lost. But speaking of questions, I have one for you now. So in this platform, we have a poll function. So now you should see it either popping up on your screen or in the bottom right corner. You see a polls option, a polls button you can click on to look at the question that is here on the screen, which is a very broad one. How do you feel about the revised CSRD? We are very curious to know where you stand. Are you happy with them? Simplification makes life easier for all of us, for my business especially. Are you not sure what to make of them? That's probably why also, or might be why you're here. Or are you concerned? Are you concerned around the simplification that there might have or might be some negative implications down the road with this one? So if you could please put in your answer, we would love to hear what you make of the revised CSRD. And I see the responses coming in right now. The leader is not sure. Probably a bit of a self-selection bias. You're here because you're not sure. You want to know more about it. But honestly, that is what I hear a lot in the market as a sentiment. And then it's a close second between actually happy and concerned. It's actually a tie right now, 27. So keep putting your votes in, but it looks like it's remaining not sure is the majority. And then we have pretty much a tie between you're happy and or concerned. So we hopefully going to shed some more light for all of those three groups. Maybe we move some happy people to concerned people or vice versa. Let's see. Sapanta, why don't you take us to some more details around the CSRD?
All right, great. So let's talk about what all of this actually means for businesses that are in scope and later tackle out of scope businesses. But first, let me quickly attempt to summarize Alex's brilliant timeline here. Originally, we had these 4 CSRD waves, wave 1, 2, 3, and the non-EU companies. Wave 1 was already reporting for financial year 2024 and the others following in subsequent years. Now, last year, through the omnibus package, it introduced some relief measures, right? It affected the timelines. So wave 1, they received the quick fixes, allowing certain data points to be postponed, while wave 2 and 3 had their timelines completely pushed back by 2 years. And then by end of last year, the scope had changed. So wave 3 are now out of mandatory scope, and some companies in wave 1 and 2 may also fall out of scope if they don't meet the new thresholds, right? And then we have the non-EU companies that also got their updated scope requirements, which you can see on the slide. So hopefully this clarified things whether you are in scope or out. And if you are still in scope, it's worth starting to look at the simplified ESRS. Now, like Alex mentioned, they're not fully approved yet, but they already give a lot of clarity on where things are heading. The biggest update here is the 61% reduction in the mandatory data points and the full removal of all of the voluntary ones. So we're going from roughly 1,100 data points down to about 430. I want to emphasize again, that's a massive reduction, and hopefully that will make things far less overwhelming than it previously was. Now, content-wise, one of the most important updates to the revised ESRS is the introduction of fair presentation. So instead of you just ticking off checkboxes, companies are now expected to take a step back and ask themselves, does this report fairly represent us? And from a practical standpoint, that means that you can leave out certain type of information if you can justify for it, but it also gives your auditors more room to challenge you if they don't think the picture you've painted is fair, right? So the goal here is to avoid reports that are overloaded with irrelevant details while showing an accurate picture of who you are as a company. On the double materiality side, the process is much clearer, and a major change is the removal of sub-topics. Now, I do want to highlight, though, that if you've already done a double materiality assessment on that level, you're still fine. You've just gone deeper than what is being required right now. And finally, at the ESRS data point level, the requirements are much clearer, less technical, and they're better aligned with global frameworks like IFRS and GRI. And this really helps you when you're working with multiple internal teams that are involved when you're building your sustainability statement. Now, if you instead fall out of scope, which many companies will, the key question is, what do you do now, right? And there is a quote by the EU Parliament that I really like to highlight, and I'll read it out for you. It says, firms with fewer than 1,000 of employees will not have to provide information to their bigger business partners beyond what is included in the voluntary reporting standards. Now, to break this down for you, it means that you're not legally required to provide unlimited of information to your larger business partners. That's the value chain cap Alex mentioned. However, they can still ask you for information that's included in the voluntary reporting standards, and those are more commonly known as the VSMEs. Right, so a question to ask yourselves is, what's actually in the VSMEs, and what do I need to do to be ready for these kind of requests? Let me walk you through that right now. So first of all, let's just clarify that when you're looking at the VSMEs, there's no double materiality assessment required. Instead, what you do is you go through all of the data points in each of the topics and you use an if applicable approach. So if something doesn't apply to your business, you can leave it out. Well, that being said, some data points like your scope 1 and 2 emissions, they're expected for all businesses. So you can't do that for all of them. It's really key that you read the data point to see whether you can leave it out or not, since it will be stated right there. But content-wise, VSME covers the key areas of sustainability that you might be asked about. So your policies, your strategy, who's accountable at the top. It also includes your environmental topics like climate emissions, energy use, and where relevant, biodiversity, water use, pollutants, and waste. And then on the social side, it covers workforce issues like health and safety, gender pay gap, and human rights. And from a governance perspective, it includes matters like bribery and board diversity. So overall, if you're in scope for CSRD, it's a good idea to check out the simplified ESRS. And if you're out of scope, I strongly recommend that you review the VSME standards, as this will help you be prepared for those larger partner requests while maintaining that competitive advantage. So with that, I'll pass it back to Krumi.
Thanks, Sepanta and Dr. Alex. Very insightful. I hadn't considered the importance of doing VSME before that quote that you read out. So very interesting. I had a couple of questions, and I'll begin with you, Sepanta. Do we know when member states will have updated their CSRD legislation by?
No, we don't know. That's a great question. We don't know when member states have updated their CSRD legislation. It varies a lot. So in the meantime, I do strongly recommend that people have a backup plan in case that national legislation is slow or even differs from the EU directive.
And that was my follow-up question around the national legislation. So beyond CSRD requirements, is there something else to look out for, such as that?
Yeah, exactly. So, I mean, I think it's really good that you bring this up, because I think a lot of companies miss out on this piece of information, is that we all follow what the EU directive is doing, and that's good to do. But by the end of the day, if you're a company, you really need to look out for that member state legislation, right? So with other words, if you're under Swedish law, you follow Swedish CSRD rules, right? That will ultimately decide whether you need to report. And in the meantime, the current member state rules still apply.
Thank you, Sepanta. Broader question for you, Alex. What specific areas will be impacted by this simplification of CSRD in the months and years to come?
That's probably to be seen in the months and years, especially. I can only, from what I know now, I would like to highlight two areas which I think are important to keep in mind. It goes a bit to the kind of second order consequences of the simplification. So coming a bit also back to the poll we ran before, I can totally see why some companies are relieved actually by having to report fewer data points, maybe even falling out of scope, or being now protected against all of those, huge questionnaires from the buyers. I think, however, it will it will create some consequences in procurement and supply chain operations. Those functions have also relied heavily before on those direct engagements with supplier around questionnaire, etc., to gather the data points, not just for reporting, but also for reporting. So now I see that these relationships are going to be more difficult to access. These data points are going to be difficult to access. So you as a large organization who was still in scope of the CSRD likely will have to shift strategy, probably use more proxy data. Honestly, what we wanted to get away from, because we wanted to get to more real data actually from the companies to really know what's going on, because only then you can actually take very informed action. Otherwise, you're stuck with very high level, the average information from the industry that you can gather from any spreadsheet you find pretty much. So I think procurement supply chain teams are going to have to rethink strategy, especially around scope 3. And then also one aspect which we didn't touch upon, and which also the CSRD, in the context in which we summarized it here now, doesn't touch upon, is around finance, especially sustainable finance. There was a lot of noise, a lot of movement in the market, so not negative at all, positive, around sustainable loans or sustainability-linked loans and lending, etc. So I think there also, with the inaccessibility of data points, especially from SMEs, that would qualify them for such loans, there's going to be a shift in the market, or I think also like a question in the market for how do we do those simplified green loans anymore in absence of those data points. So those are two areas that I would definitely like to highlight. And last but not least, if you zoom out even further, the EU itself has its own climate targets, right? So also there, you want to make progress, you want to also then monitor and incentivize, but in absence of the right data, it's very difficult to see where to put those incentives and how far we're moving towards the target.
Quite a lot at stake and quite a lot of implications. But if we also go beyond CSRD, there were a lot of talks for other regulations, CBAM, CSRD. How will they be impacted by this omnibus change?
Exactly. So you mentioned already this CSRD, this CS3D, pretty much supply chain due diligence directive. So there is an overlap for sure with the CSRD, but this is really around the look through in your, like across your supply chain. And there also we've seen limited. So in this is what I said before, the omnibus is not just CSRD, the omnibus is much broader. So CSRD is part of what has been now proposed and decided upon. So there's going to be a reduction in focus on your tier 1 suppliers pretty much, so your direct business partners. There's going to be now a bit more my own view. I feel this risks failing the whole idea behind the supply chain transparency directive, right? If you want to have supply chain transparency and you only look at your first supplier, I would argue this is not the real story that you then get if you do not go beyond your tier 1 supplier. So again, I understand simplification, make things, streamline things more, but the CSRD is also one of those heavily affected companies, also with increases in thresholds for companies that have to report. So a lot of information is just getting lost. And if we don't see the data, we usually cannot really act with precision, I would say. Also affected is CBAM, so the carbon border tax that has now since January, I think, officially kicked off, or it's expanding step by step. We have this 50-ton exemption where small importers of steel, aluminium, cement are now exempt from the CBAM. Also they are understandable because of limitations that companies face in data gathering. At the same time, these regulations, they are also supposed to set new incentives to set up new infrastructure even for data reporting. So watering everything down is a bit dangerous if you have this time pressure that we do face with the climate that is rapidly changing around us, and of course targets that have been set. So those are just two of many more, but I don't want to take up too much space.
Yeah, I know you can talk quite a lot about the topic, but thank you so much. There was quite a lot of information, so I thought it would be helpful to summarize it a bit. So what you can do next is to keep track of member state legislation, like Samantha pointed out. Make sure to have a backup plan. you might be requested to provide information that is within the VSME standard. There might be changes to the regulation, so it's good to be prepared for that. Watch out for the downstream effects of omnibus. Consider things like data availability to be ready for those things when needed. And then again, like Alex pointed out here, prepare for further implication of omnibus. This story will continue to unfold, and there's a lot that everyone can do to be ready for it, whatever direction it takes. Well, now it's time to talk a little bit about how normative can help your organization with this. And this is something that I could speak to great length about, but I have promised to keep it brief and simple. The first thing I want to point out is that essentially, at the very core, normative is a carbon accountant specialist. So what we provide businesses with is auditable, automated, and accurate carbon inventories. So we simplify this process, we make sure to have full transparency, and we also digest it in a way that your organization can make use of the information. Important to note, when you work with normative, you're always working together with a climate strategy advisor. We have many of them here at the company. I'm always impressed by them. They have very deep knowledge in the greenhouse gas protocol. They're flexible and they support organizations no matter where they are in their carbon accounting journey. But as the topic today is for CSRD, I also want to highlight that we can actually support you with an ESRS report. I always describe this reporting capability as collaborative. It's easy to have many users assign different tasks and make sure that you cover all the different standards. It's auditable. You have a trace of who has done what and when. And it's simple. It's not overwhelming. It comprises everything that you need, but it doesn't go beyond that. And here I would also like to highlight the support that comes with this. So Sepanta and her team, they are there to support with everything related to CSRD, so that you are not alone on this journey. You have someone to discuss your particular situation with, your requirements, and make sure that all your disclosures are up to standard. So if you would be interested to get to know a bit more around how normative can help, I believe this is a QR code. So if you have a mobile device handy, you can scan it, and it will allow you to book an appointment with one of us here at Normative, where we try to take a consultative approach to understand your situation and advise on the back of that. I'm just giving a bit of time, unless you need to lock up the phone or anything. But oh, you even have a link here if you're out of battery. But with that, I think it's time to move on to the Q&A. But first, I wanted to thank everyone for participating and listening into the webinar. And a special thanks to Sepanta and Dr. Alex for your fantastic and clear walkthroughs of these regulations and requirements. I, for one, feel that it's a bit clearer now, which was my goal for today's webinar. And I hope you all feel the same. So with that, I think we can jump into some questions. And I can see that we have a few lined up here. And one that I think is great, because we do have a London office, is how does this affect UK businesses, or is this only relevant for the EU?
Yeah, I mean, real quick, Sepanta already highlighted it, and happy for her to add more. We have non-EU companies who are affected. So we had this little table that Sepanta shared with all of you, where you saw the effect on non-EU businesses. So yes, high-level summary top of my head, either you yourself have sufficient business within the EU, then you fall under the CSRD as well, and or your subsidiaries or branches make a certain amount, I think it was 200 million plus in annual turnover within the EU, then you also fall under it. So yes, non-EU companies remain in scope if they meet certain annual turnover. They or the subsidiaries meet certain turnover targets or turnover thresholds within the EU.
Okay, thank you. That's clear. I have one for you here, Sepanta, on the DMA process. So if we have already done the DMA and want to include that in our VSME somehow, where would you recommend we put that in the report as a point of its own?
Yeah, I think that's a good question. That's a question I hear quite a lot as well. Let me just start by saying that if you've already done a double materiality assessment, then my recommendation is actually that you continue on that line and look at the simplified ESRS instead, because you've already done most of the work there, and you would be looking at the same data points that your bigger business partners are looking at as well. But if you really just want to look at the VSMEs while having done a double materiality assessment, I would recommend just referring back to them in a table in your sustainability statement. So you can always check that, or any stakeholder can always go back and check that in a table, what you're referring back to. Hopefully that answered the question.
I think it did. I have one more for you here, Alex, that I think is relevant. Are there any fines on companies for breach of the reporting?
I feel like I often get those very unencouraging questions or encouraging messages to send across, but happy to do so. As yes, there are fines. Unfortunately or fortunately, depends on your perspective. Up to 3% of your, I believe it's even worldwide net turnover, can be imposed as a fine. So if you have a significant size in worldwide business and you fail to report under the CSRD, the revised CSRD or revised ESRS, then up to 3% turnover fine can be imposed on you. Yes.
Okay, so it's good to do the reporting. Sepanta, this one is for you, and it's related to the ESRS support that we offer. Is it based on the current or the simplified version of the ESRS standard?
Great question again. The answer is we customize depending on what the client wants, right? Until now, we've been doing the full ESRS as it's been looking at, but when I talk with clients and prospects, we discuss this together and come up with a good plan, you could say. The CSRD module that we have currently has the ESRS rules, but we're also looking at adding that simplified ESRS report. Yeah.
Thank you, Sepanta. And there's one here, Alex, that I think I might need to pull you in again. Do you know when the IG3 data list will be published from EFRAG? They have said by the end of Q1, but hear rumors that is not far away.
I love it. Fines and rumors. That's what I'm here for. So I think this is a very important one to clarify. I mean, I cannot clarify rumors, obviously, and I'm not part of the EFRAG. So even if I was, I couldn't share those insights here, obviously. But I think it's an important one to point out. This speaks to a broader debate, honestly, since February last year. It's very, very dangerous here, especially since LinkedIn became a kind of day-to-day influencer news feed of many people who have many opinions, which is great for exchange, but it's not great to make company decisions based on these things that are rumors or that are, a leaked list of X, Y, Z. Even if those leaked lists turn out to be 80% correct, you don't want to make business decisions or gambles or maybe even delay certain actions on your side based on rumors or anything of the kind. I know this was not the question we was getting at, but I want to highlight that for now, all we know is the ESRS official, proposal from last year, which is now being looked at, consulted, and then decided on. So the best that we know now is what Sepanta shared. This is what we would advise anyone to prepare for. We would definitely not advise to delay anything, because again, if we just take one other step back, the whole idea of this sustainability reporting was never to torment people with Excel spreadsheets, etc. This is not the case here. This is not the point here. The point is to prepare yourself, your businesses, your investors, broader stakeholders for what's inevitably to come. Supply chain disruptions, a lot of kind of uncertainties there linked to sustainability and climate change. So you want to know where your business stands. So don't see how many bullets I can dodge in terms of reporting the requirements. Rather see an opportunity here in these assessments. Where is my business now? What is coming at me? And how can I prepare for this? Doesn't answer the question in detail, but look at what we know now and prepare for all the things you see happening around you.
Thank you. One for you, Sepanta, around VSME. Are those data points for collection set in stone, or could they be subject for change also?
Yeah, I think this is a great question as well. And when they were first developed, they were developed for SMEs, right? So less than 250 employees. And now with all of the changes going on, it's almost, I think IFRAG has said that they will take a look and see if they can update it again, because it almost needs to be rechecked with all of the new scope changes. So short answer, I do think you could expect some sort of an update to these. I wouldn't expect them to be fully set, but yeah.
So a bit of a nail biter there as well, maybe, but it will be interesting to see the developments. And in a way, to me, this question was answered throughout the webinar, or I was made clear on this, but what would be the best argument I could use to convince my budget holders in my organization that we should continue to invest in carbon accounting despite being out of scope for CSRD?
Yeah, I can just almost repeat myself. It's in your best interest. It is in your own interest. I think it's important to realize that sustainability is not one of those nice to have buzzwords that you want to check a box with. It's literally going to be your ability to sustain the business in the future. So I think that is super, super important to realize it's in your own interest. I mean, be relieved that you don't have to go through 1,000 data points. Of course, this will save you time and money, of course, and resources. But do not try to evade any kind of reporting. In your own interest, know where you are exposed to carbon, exposed to risks in your supply chain, in your operations. Honestly, also see where you can save cost. A lot of things that we realize when working with organizations, there are cost savings there when you assess, for example, energy bills, supplier routes, etc. So it is in your own best interest of the organization, of all stakeholders involved, to prepare yourself to have a proper sustainability strategy, to look at your Scope 3 emissions in particular, and then to set some targets for reducing those impacts and oftentimes reducing also costs, being more efficient and more attractive to investors and the market as a whole.
Thank you.
Is it okay to just add 2 cents here as well? That when it comes to carbon accounting specifically, even before CSRD, companies were already reporting on it, right? So, I mean, the market was driving this, not legislation. So I think a strong argument to highlight is how many of your stakeholders are asking for this information, right? Your investors, your major partners, your clients, and show them that your competitors are increasingly reporting on carbon metrics. They're aligning with SBTi. Show them that it's becoming more of a standard than a compliance need. Yeah.
Thank you both. I do vividly remember having a coffee in the office and talking to Dr. Alex about the topic, and you referred to this, how do you see your business in the next 10, 15, 20 years? It's a matter of survival and something that you need to do in the long run. So why not just get started now? But with that, I want to thank you again, Dr. Alex and Sepanta, for your participation here today. I'm very happy with the clarity that you bring to the topic, and I hope everyone tuning in feels the same. So I think we're going to wrap it up for today. The conversation continues, so to say, and you were shared a couple of different links to get in touch with Normative. And I would be happy to meet any one of you to discuss how this impacts you and to explore if Normative can help. But that's it for today. Thank you so much.